Thank you for joining today, and welcome to this deep dive journey into one of the most transformative books ever written for traders, The New Trading for a Living by Dr. Alexander Elder. If you're serious about becoming a disciplined, confident, and consistently profitable trader, then stay with me till the end, because what you'll hear in the next couple of hours has the power to completely reshape how you think, how you trade, and how you manage risk in the market. And before we begin, I'd like to thank you for being here. Make sure to like, share, and comment your biggest takeaway at the end of this video. Now, let's begin our journey inside the mind of a professional trader. Dr. Elder begins this masterpiece with a brutal truth. Trading is not about predicting markets. It's about managing yourself. He emphasizes that your own psychology is the single most important factor determining success or failure. You can have the best tools, the latest indicators, or the most advanced algorithms. But if you cannot control your emotions, fear, greed, and hope, you'll sabotage your own results. Elder teaches that the markets are a mirror. Whatever weaknesses you have in your personality will eventually show up in your trading results. If you're impulsive, you'll overtrade. If you're fearful, you'll hesitate. If you're greedy, you'll ignore your stops. That's why self-awareness is the foundation of trading mastery. He introduces the idea that every trader is three people in one: the methodologist, the psychologist, and the risk manager. The methodologist is the rational thinker who builds your trading system. The psychologist manages your emotions and keeps you disciplined. And the risk manager ensures you survive long enough to keep trading. If one of these three fails, your trading career will suffer. Elder compares trading to flying a plane. You can't rely on instinct. You need checklists, instruments, and discipline. Next, Elder talks about one of the biggest mistakes new traders make: treating trading like a hobby instead of a business. He stresses that a trader's job is to protect their capital, not to gamble for excitement. Trading, he says, is a business with expenses, revenues, and profits. And your capital is your working tool. You must think like a professional, not like a player. Every decision must be logical and backed by data, not by emotion or impulse. Professionals don't chase trades. They wait patiently for the right opportunities, just as a hunter waits for the perfect moment to strike. He also highlights how dangerous the lure of easy money is. Many beginners believe that trading is about finding the perfect indicator or the magic formula. Elder crushes this illusion by showing that no indicator can predict the future. Indicators only describe what has already happened. Your job is to interpret them and make intelligent decisions based on probability, not certainty. Elder says, the market is never wrong. Only opinions are. This mindset helps you detach emotionally from trades and focus on process over outcome. Then comes one of Elder's most famous contributions to trading theory, the triple screen trading system. This system revolutionized how traders approach multiple time frames. Elder teaches that no single chart can tell you the whole story. The triple screen system uses 3 time frames simultaneously. The higher time frame defines the long-term trend. The intermediate time frame looks for corrections or pullbacks, and the lower time frame helps you find precise entries and exits. This multi-layered approach prevents you from trading against the main trend and reduces false signals. Elder calls it aligning yourself with the tide, the waves, and the ripples of the market. Another powerful concept in the book is money management, or as Elder prefers to call it, risk control. He explains that even the best traders are wrong about half the time, and that's perfectly normal. What separates winners from losers is how they manage their losses. Elder insists that you should never risk more than 2% of your trading capital on a single trade. That simple rule ensures you can survive a long series of losses without blowing up your account. He also explains the importance of position sizing. Knowing how many shares or contracts to trade based on your risk tolerance and stop-loss distance. This transforms trading from gambling into a mathematically controlled business. Elder then dives deep into the psychology of crowds. Markets are moved by human emotions. fear and greed create cycles of boom and bust. He discusses herd behavior and how traders often follow the crowd because it feels safe. But the crowd is almost always wrong at turning points. Successful traders learn to think independently, to act against the emotional tide, and to trust their systems even when it's uncomfortable. Elder reminds us that the crowd feels most comfortable near tops and bottoms, but that's where the danger lies. A central part of Elder's philosophy is the trading journal. He calls it the trader's mirror, your personal record of every decision, trade, and emotional state. Writing down your reasoning before and after each trade helps you identify patterns in your thinking and behavior. It's not just a diary, it's a tool for self-improvement. Over time, you'll start to see which mistakes you repeat, what conditions lead to your best trades, and how your emotions influence your actions. Elder says, a trader who doesn't keep records is doomed to repeat the same mistakes forever. He also emphasizes the importance of patience and selectivity. Not every day is a trading day. The market doesn't pay you for activity. It pays you for accuracy. Elder suggests that professional traders may sit on their hands for days or even weeks waiting for the perfect setup. The amateur wants constant action, but the professional wants consistent results. This difference in mindset separates gamblers from professionals. Then comes one of Elder's most powerful lessons, the need to cut losses quickly and let winners run. Most traders do the opposite. They take small profits out of fear of losing them and hold on to losing trades hoping they'll turn around. Elder calls this reverse logic, and it's the reason most traders fail. The market rewards discipline, not hope. A good trader knows their stop before entering the trade and never moves it unless it's in their favor. He says, you can't control the market, but you can control yourself, and that's where your power lies. Throughout the book, Elder integrates psychology with technical analysis. He covers essential tools like moving averages, MACD, stochastics, and volume indicators, but he constantly reminds the reader that these are just tools, not magic. The value lies in how you interpret them and how disciplined you are in applying them. He also explains how trends form, how to identify market tops and bottoms, and how to recognize false breakouts. But again, he anchors everything back to self-control and emotional mastery. Another key section of the book focuses on education and continuous improvement. Elder insists that a trader's greatest investment is in learning. Markets change, volatility shifts, and strategies that worked yesterday may fail tomorrow. A professional trader adapts. Elder encourages readers to backtest their ideas, study market history, and never stop refining their craft. He says, the moment you think you've mastered trading is the moment the market humbles you. He also provides deep insight into managing multiple trades, diversifying positions, and maintaining balance between risk and reward. He advocates scaling in and scaling out, entering a trade in portions rather than all at once to manage uncertainty. He also explains how to build a personal trading plan, a roadmap that defines when to trade, what to trade, how much to risk, and how to evaluate results. Elder doesn't shy away from talking about failure. He shares stories of traders who made fortunes and lost them due to arrogance or overconfidence. He warns that success breeds complacency, and complacency kills discipline. That's why humility is a trader's secret weapon. No matter how much you win, never assume the market owes you anything. Every trade is independent, and the market doesn't care about your last win or loss. As the book unfolds, Elder combines real-world wisdom with psychological insight. He reminds us that trading success is not measured by a few big wins, but by the ability to survive, stay disciplined, and keep learning over decades. The real goal isn't just to make money. It's to become a professional thinker, a strategist, and a master of self-control. Elder's ultimate message is profound. Trading is a journey of self-discovery. Every trade reveals something about you, your patience, your greed, your confidence, and your fears. To succeed, you must learn to manage yourself before you can manage your trades. You're not just trading charts, you're trading your own beliefs, habits, and emotions. And as we reach the end of this powerful book summary, remember, the markets will always challenge you, but they will also reward discipline, knowledge, and persistence. Take the lessons from the new trading for a living and apply them in your daily trading routine. Build your systems, respect your stops, manage your emotions, and never stop learning. Thank you so much for watching. If you found value in this detailed breakdown, don't forget to like, share, and comment below about what lesson resonated with you the most. Your support helps this channel grow and allows us to bring more book breakdowns, trading psychology insights, and timeless wisdom from the masters of finance. Thank you again for being part of this journey. And until next time, trade smart, stay patient, and keep learning.